Hey, what is going on, guys? Edward here, back with another video. This time to clarify a few things about a topic that I have actually been asked a lot on Instagram and also on YouTube regarding engineered or engineering liquidity or something like that. So let me make something clear right here because engineering, I think it's like that, the word engineering liquidity. There's so many things. Okay, the same as a retail trader has, like what candle patterns, uh, um, the actual flag patterns, structures. And there's so many things in trading, that you think like this is never going to end. There's always something new. There's always something that comes up. As soon as you think you have it figured out, you know new things are starting to come up. And you have to know that there always going to be something. Okay, people also, uh, sometimes what they do is they put names into different things, and trading. Okay, this is, I believe, this is just a name right now. Engineering liquidity, whatever they want to call it. It is basically that. It is just liquidity. Or is the way I see it, this is just trend line liquidity. Okay? So don't overcomplicate things. Okay? I know you guys are right now like going crazy. Oh my god, what is all this thing? Engineering liquidity. It is basically trendline liquidity. Okay, and I'll explain. There are some videos actually on YouTube explaining this, um, about engineering liquidity, and I think there are some things that are not necessarily to pay attention to, like, oh my god, this is so confusing right now. No, and I'm gonna give you some examples. Okay, so we are on the, for example, in this uptrend right here, this is some of the things I saw actually on YouTube. So let me explain. For example, let's suppose we do have this push, right? We're seeing the market going bullish right here, pulling back, push, pull back right here, another little push, and then we have this. The market starts dropping, breaks the first higher low, right? Once it breaks it, this is called inducement. Okay. After the price, if you're up and the price breaks the first higher low, that's called inducement. All right. And then what happens after that, if the price keeps dropping and dropping, now breaks the next one, this is what these guys want to call engineering liquidity. Okay. This is just, to me, this is just, the market is just still taking liquidity out, right? Most likely there is an order block somewhere right here. What I do know is that normally this first, which is called inducement, this one is a trap, right? For maybe, I don't know, maybe there's a little order block also here, right? And new smart money traders, they will try to go ahead and buy in this area. And the market instead, what it does is just swipe them out and keep dropping, and take also these lows to mitigate it at the bottom, right? Your the order block, the one that is at the very bottom, before actually pushing up, right? So that is just that. If you also see this, if you also see this, this is a trend line. Okay, this is also called trend line liquidity. So the market will, if there was a mini trend or a small trend, the market will liquidate these lows, right? We'll take all this liquidity that were here in this trend, okay, for buyers who were there. So we'll take them out, right, before actually pushing up. Potentially there is another block somewhere here, of course, that you need to pay attention to, and the price will push up. So, but in this case, as I mentioned, people are calling this is definitely the inducement. Okay, this is inducement right here. And now they're saying that this right here is engineering liquidity. They're giving you more words to get confused, and to just to think, and to start putting all these names into this thing. Like, oh my God, now I have to call this engineering liquidity. You know, the more names you put into this thing, the more complex you're gonna make it. So, or let's put it as they say, I think it's eng liquidity like this, or LQD. So, all right. Now I have to change to that. Oh my God. Yeah, that no. What's happening there? It's an engineering liquidity. So you see, they're adding more complicated words into this thing. Like, come on, don't make it more complicated. The markets, trading, it's already complex. So don't make it complicated. Don't start putting complex words into this thing. All right, that's definitely going to get people more and more confused. To me, this is just trend line liquidity. Okay, the market take down this first uh, higher low right there. That's called inducement. Okay, this is definitely inducement. Right, you can just put it on X or just liquidity. Right, the market is liquidating the first thing. The best thing I mean I can tell you is called inducement because it's inducing people to sell when in reality the market is still on an uptrend, right? So right here people is the market makers are inducing people to go ahead and sell, right? When in reality in long term the market is bullish. So this right here below these lows in this small trend line to the upside, this is just a liquidity below these lows, right? So the market will try sometimes, not all the time, sometimes after the inducement, the market might actually be taking, maybe there's an order block right here potentially, right? So you can actually look for the buy. Okay. Sometimes you might understand, oh, the price went a little deeper and it stopped me out. Oh shit, that was an engineering, whatever they want to call it, engineering inducement or engineering liquidity right there. Oh, I didn't see that. That crap is going to happen. Okay. So just don't get confused. Don't get scared. Don't be thinking, oh my God, this is something now that I didn't know. And no, this is the market is just going to create these traps, these little traps to take liquidity of the market, and most likely there's something here. Sometimes even if there's an order block at the bottom, the market might actually miss it, right? It happens. It actually happened recently to me. The market just took the liquidity out, and then after that the price just went up, right? It does happen. So don't get frustrated or scared because of that. And oh my God, what is engineered liquidity? So in this case, on a downtrend, we also see that okay, we're having a break of the structure right here. This is our boss. After the price gets lower, the price breaks the first lower high, right? After that breakout, what is this called? Inducement. Okay, and where is the this apparent engineering liquidity is somewhere here. All right. To me, this is just liquidity. It's as simple as that. I'm not just gonna keep adding more names to that. So that is just liquidity, whatever you want to call it, engineering liquidity, or just put the names you want in there. I mean, that's fine if it works to you. That's it. The market just simply took the liquidity from this trend, right? So trend line liquidity. On this highs, the market just liquidated this highs right there, this lower highs, mitigated the OB to then drop. All right. It is just as simple as that, guys. Don't get it complicated. Whenever you are on a whatever, if it's an uptrend, a downtrend, right here, you can see that in this drop right here, for example, right, breaking the structure, change of character, the price drops, pulls back a little bit, another low, and then pushes to the upside. So this right here is the first break of the first lower high. In this case, we're down to the downside, right? So it breaks that first lower high. This is called inducement, right? Now, once the price continues pushing up and takes another high, people will call this, as I mentioned, engineered liquidity. Okay, that's how they will call it. That to me is just this. It's trendline liquidity. There was a minor downtrend right here, right? The price is breaking to the upside, is taking all that liquidity before actually continuing to the downside. So you see, it was a minor downtrend, The price liquidated everybody, thinking that, yeah, we are actually going to continue dropping. No, it's taking all this liquidity out to what? To then mitigate a potential OB at the top. And that is basically it. So don't make it complicated, guys. Okay? Don't keep adding more complicated words to your trading. All right. If you want to add that to your thing, as engineering, if you want to keep adding more things, more complicated words to your strategy, to your trend, to everything you're doing, I mean, cool. But if not, just liquidity. That's it. Inducement is the only word that, I mean, it's already kind of complex right there. Inducement, we already know the break of a structure, the change of character also. So a lot more things going on. So engineering liquidity now. It is just freaking liquidity. That's it. All right. So when the price keeps dropping right here in this little trend, the market starts taking, takes the first high right there. Okay. Then we have a engineer liquidity right there. We could have had another engineer liquidity right here at the top. I mean, come on. So that is it, guys. I don't want to just keep extending this too much because it's that simple. It is just trendline liquidity. The market is just taking more highs down before actually continuing the direction. That is simple it. If you have some doubts, if you have still some questions, please let me know in the comment section. I just wanted to clarify this for you because there's a lot of videos now starting to come up on YouTube regarding this, and it is just liquidity. It is just liquidity. All right. So thanks again, guys, for watching. If you find this content helpful, please subscribe. I'll be posting more and more content like this very, very often regarding auto blocks. I know you like these type of things, and I'll see you guys in the next one. Take it easy, guys.